Hey folks, welcome back to Honey Money SG. Today I will do a little bit of update of what I'm doing with my SRS portfolios, but fundamentally I just want to share that why I stopped investing my SRS. Now if you have watched my previous investing SRS videos, I do talk about investing my SRS in both robo-advisors like MoneyOwl and Endowus. That was like between 2020 and 2021 period, but in 2022 earlier this year I did talk about investing SRS through a lower cost brokerage like Poem's Cash Plus, because you can buy like S27, which tracks the S&P 500 index. And also I believe like many of you actually started looking at SRS towards the June period because the government announced the retirement age will be raised from 62 to 63, and a lot of people actually read articles and financial blogs telling you to go and set up your SRS now. But many of you still do not know what to do with it, right? Whether you want to invest it, what are options that you can do with SRS. So I'm going to share what I did and what am I doing in the future, because I will give you a little bit of perspective of how I think. Of course, whether you want to follow it or not is really up to you. I'm just sharing what I'm doing, and it's definitely not financial advice. Now, SRS, for some of you may know, is actually having really limited options in terms of investing. You can only invest in like Singapore listed products. That means you cannot really invest in overseas stocks, overseas ETF that maybe charge a lower management fee or something like that. But I think there are really very few options if you want to invest your SRS. Maybe you have to pick like local Singapore stocks, or even if you want to buy like the S&P 500, you have to buy the S27 ticker. And that is what I did, right? Invested my SRS in S&P 500 through Poem Cash Plus S27. And my primary motivation to start SRS is really for tax relief. So I think if you are not really into tax relief, you can just open an account with $1 first just to really set the retirement age. Of course, I know now it's a bit too late, but 63 is just 1 year later than 62, better than in the future when you do not have this option anymore. So SRS is fundamentally a tax relief strategy. So if you do not have like any income tax that you want to deduct or have relief, right, I don't think you should go for SRS. Maybe you can look at topping up CPF first, because CPF really have this kind of interest rate, the 2.5% your OA, 4% your SA, and 4% in your MA, which is really pretty good considering that we are already in a bear market this year. Hey, have you heard about it? Huh? Heard what? I got $100 worth of Apple shares for free. Are you sure or not? How did you even get it? Well, I started using the Weibo app and deposited $2,000 and make 6 buy-in trades. If you don't believe me, you can take a look at my Weibo app right here, showing you $100 worth of Apple shares. Wow, is that really such a good thing for free? Can you teach me how to do it? So you can start by using my Weibo referral link down below, sign up and deposit the first deposit of $2,000 in Singapore dollars and make 6 buy-in trades so that you can qualify for $100 worth of Apple shares. Weibo also gives you 0 commission fees and platform fees for all stocks, ETFs and options in the US market. So make sure you sign up for a Weibo account using my link before the expiry date. And with that, let's get back to the video. So why I stopped investing my SRS is the golden question, right? And that is really because I look at the Singapore savings bond, it's giving like 3% now. If we look at the annualized 10-year return, right, 3% per year. And that is actually pretty attractive. I mean, it is really a risk-free return guaranteed by the government in the savings bond, and you don't have to take significant risk to actually get 3% per annum return. If you think about it, the special account in CPF is already giving 4%, and then you have another instrument in SSB, Singapore Savings Bond, that is giving you 3%, just 1% shy. I think it's a fairly good alternative to put your SRS funds into it. And don't get me wrong here, I'm not telling you not to invest your SRS, because I think if you can afford the risk and the long time horizon to invest your SRS, investing in a broad-based index like S&P 500 definitely can do you better in the long run. But you know, I'm kind of a low risk person, and I think 3% is kind of sufficient for me. And that's why I started looking into SSB to get 3%. Now bear in mind, I have already contributed 50% of my SRS contributions to date, because you know, for a local Singapore or PR, your SRS limit per year is only 15.3k, $15,300. So I think half of it is about $7,650, which I already contributed up to my first 6 months in 2022. So for my remaining half of the year since July, I need to contribute another $7,650 to hit my SRS limit cap. And for this $7,650, I will actually put them in the Singapore savings bond in tranches. For example, this upcoming August bond issue of the SSB is gaining like 3% annualized, and I think I'm going to start putting a little bit of my SRS funds into the Singapore savings bond first, because I really like that yield. 3% is fairly good for risk-free return, and also because let's talk about alternatives of SRS, which is cash, right? Because you know that cash you can invest in a variety of options. You can invest in like foreign listed ETFs, foreign listed individual stocks like in the US market. So you can actually use cash to do a lot of things, and that is what your SRS cannot do. So I was thinking, why not, right? I keep my SRS funds into the Singapore savings bond, and then I'm going to use the cash to go and invest in other foreign listed ETFs or stocks. And that is really because I already have interest in the Singapore savings bond, right? I don't have to take much risk to go and achieve 3% returns. I'm happy with that yield. And if you don't like the Singapore savings bond, that is fine. You can continue your investments with the Poems Cash Plus S27, or you want to put your money in robo-advisors to invest SRS, that's also fine, right? But I'm just saying that if you are already using your cash to deploy in the SSB, then why not you start looking at SRS, put in some contribution to SRS, offset some of your tax relief, then use that SRS to go and put in the Singapore savings bond, while you can still use your cash, because your cash is actually a lot of opportunity to invest, a lot of options that you can look at, while your SRS is really limited by a few options. So that is my thinking behind all this kind of strategy. It's more like looking at what kind of opportunities that you can use the best for your assets. So having said that, it's not like I'm going to stop investing totally, because now that I have the cash on hand, instead of allocating into other things, I can start to look at other kind of ETFs with S&P 500 even. If you look at the US market, there is VOO. If you look at Ireland domiciled London Stock Exchange ETFs, you have CSPX, which also tracks the S&P 500 as well, at a much lower expense ratio and is liquid, you see. So yes, this is my quick update of what I'm doing with my SRS and why I'm not investing in my SRS anymore. It's really more like an alternative, an opportunity, you could put it that way, but I hope that it have give you some insights on whether you should do your SRS in investing or you should just put it in the Singapore savings bond. That's totally up to you. But for my CPF, I'm just going to continue investing, because you cannot put your CPF into the SSB to stack the interest rate, right? It doesn't work that way. CPF is already giving you 2.5% OA, 4% SA. It's not like you put in the SSB then give you another 3%. Doesn't work. So you do really have to invest your CPF if you want to outgrow the interest rate that CPF board is giving you. And that is still what I'm doing right now. I'm putting money into Endowus and MoneyOwl in my CPF OA funds every month. 1,000 in Endowus, 1,000 in MoneyOwl. And if you want to look at what is the comparison between these two robo-advisors in investing your CPF, then I can refer you to watch my previous video right over here. With that, thank you for watching. My name is Christopher. This is Honey Money SG, steering young adults to financial independence.